Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this wrap-up is for Tuesday, the 13th of April, 2021. We're after 7 p.m. at night. Long day for me today. A lot of trade opportunities all over the place, you might say. All right, game. You got down as low as 132 and you come back and close almost unchanged. Maybe the washout is coming to an end on that stock. That's one of the things I look at for those. You saw today the CPI numbers. They were hot, but not overly hot. Close to what the market expected. Well, better in just about every case. Better being a hotter number than the market thought. What set the markets down early in the morning was the Johnson & Johnson situation where they put on pause the disbursement of the vaccination, and that is because I guess out of nearly 7 million people, 6 women aged 18 to 48 have gotten ill from it. 1 has died, 1 is in critical condition, so it's about 1 per million, and I don't want to play that down. 1 is too many, so enough of that. But I understand the concern. The problem will be they'll look to see what it is, and this drug will come back onto the market because the risk reward is just there. Got to understand how many people die a day without these vaccines, and that's going to be it. Now, can they make it better? Can they screen out who gets this, who shouldn't get it maybe? I imagine they could. At the very least, if it's just women that get it, don't give them that shot. I mean, that's a no-brainer in my head. If you look at the metals, they came back, which was a surprise today. Interest rates, the real yields, fell down today. I don't think traders expected that with the hotter CPI number. Tomorrow we have bank earnings. You get the Coinbase release tomorrow on the NASDAQ, its IPO. There's a lot of things happening, and it just keeps going that way. The month's into what I call the flow now. But the bank earnings should be interesting. I know Bloomberg had me do an article for them yesterday on their TikTok, and I was saying between their fees from mortgages, which were red hot during the month, trading, wild trade. Yeah, we had a period here recently where it got quieter, but that's all it did is get quieter. It was a very big trading month. Opportunities that they've made on the curve yield, got to be there as well. So I'm expecting what is that, Archegos, that those funds that the banks did actually pretty well. When you look at GameStop, why do I think that that could have been it today? You tell me where that Bollinger Band is. And that's what I'm hanging my hat on. That doesn't mean it has to stop there, but the odds are pretty big that they will. At the end of this video, you will see my video on what I teach now on Bollinger Bands. It's the last 3 to 5 years, all the little secrets I've picked up that are different than anything that I've seen on the internet. I've seen nothing to touch it. This is stuff that I came up with. I think you'll find it interesting. It's 13 video chapters. It's certainly worth, if you're a Bollinger Band person, it is worth the small cost of it. But downtrend, hitting support, and now the markets approach the oversold area. So could be an area where the market now wants to find its legs. There's nothing bullish about this. There might be reason to not be as bearish as you were before. On URA, the market continues to sink back, did not even move back up with the other metals today. Interesting that Iran is going to take its uranium to 60% enrichment. I guess that's no way to get the U.S. to come to the table. They think that because I guess Israel's accused and probably did do a lot of damage to their centrifuges, that they should go to 60% enrichment. So I guess any other argument they'd have, you can use the same logic, will launch the nuclear weapon. How far are you from one step to the other? I don't think it's that far. Wrong people to have that. But if you look at it, you can see the market's in a downtrend, so until you get back over the 2066 level, 1804 could be a downside target. Momentum is just turned down. In PAVE, as I told you, I think this market peaked out up here, and now you're in one of these, I'm just going to churn around patterns. And if you look at the market, you've got lower highs and lower lows. You are in a downtrend in the swing line. It's countered because you're over the 18-day average. I look at the 18-day average as my line in the sand. It's a filter on the swing line. When it's over it, my bias should be up. If the swing line's down, my bias is up, I go to the sideline mentally. I just go, okay, they washed each other out. Where the market ran into its trouble, there's my pal, that Bollinger Band, and I teach about that with the combination of this momentum that's just staying overbought right now. So a market that's in a pause, certainly. Can't call it in a downtrend, it left the uptrend. THCX, I'm looking for support right here at the lower Bollinger Band. Today's low is 1812. The Bollinger Band number is 1812. They hit exact lows. If it slips here a little more, you could go to that 100, but I'm not looking for a lot more than that unless you'd embed, and it's not looking like it's ready to do that at all. SMH, no trend. You got, if you look at it, lower lows, higher highs, but you are embedded. So I'm not really studying this trend. I'm looking more at this. Until the red line closes under 79, I say the pros are buying this market, the semiconductors, looking for a pop that could carry to the 264 level. Lose that 79, lose this reading and close under 79, then I think 243.98, wherever that 18-day average at that time is where the market wants to head. XLI, the industrial sector, still looks to me with the embedded reading powerful, trend up, bias up. Next target could be 101.96, the upper band. Again, the slow stochastics are ruling the day. When they embed, they take over the chart. That's what I teach. XLE, what do you do the first time you hit a lower Bollinger Band? So long, guys, and that's exactly what I think you do. I think you pull in your money right from there. That does not mean I've turned bullish, but that's where I think the pros will pull in their money. SPY, you've got your embedded reading. Did you see today how the markets all broke after that J&J news? This market came back. The only markets that didn't were the Russell and the Dow. The Dow definitely had a late day rally, a real late day rally, where it got up to about unchanged, but then it gave back and closed at about a 30-point loss, which, given the size of the rally, it's not much of a loss. You can see how the market still continues up here. It is bent away from the upper Bollinger Band, but it's looking for news. So, you know, these earnings reports are going to do a lot in the marketplace. The markets are baked in and built in bullish reports. So they're set up for what? Either the reports are better, overshoots, or if they meet that number and lower, that can be a disappointment. So we'll see which way that they want to come in with that. The emerging market, embedded reading. So bullish on this chart. Next target, if it continues that pattern, to me, 78.50 again. I do think the pros are buying this market on each of the breaks here. In GLD, all you did is fall back on this chart, back to the line in the sand, that 18-day average. You're not trending, you're going sideways. We've talked about that numerous times now over the past week, where I think the market ended this whole break, and now it's spinning itself. Could be a big base that is building for the market. It acted today like it likes the idea of inflation, and it's got to like it. If the dollar is dropping, inflation is coming. That's the recipe for gold. If the dollar takes off because interest rates start soaring, that will hurt it. That's what I think the market is telling us. When we come to the gold miners, well, if gold's good, the miners got to be good. Remember, they've got the stuff in the ground no matter what happens. Overbought, though. Overbought, no trend, fighting at the 100-day in the upper Bollinger Band, bias up. Sort of sideways action, but not quite like the gold market is. TLT, when we were over here, what did I tell you when this market, and I know I did it, when you got over this number, I said, uh-oh, we've ended that leg of the downtrend. And I know I did this in my writings, I've done it in my morning report, because this whole thing down, now all of a sudden you're getting through prior highs, and that's often indicative that you're going to start sideways action. And that's pretty much what the market has done. It's got that sideways action again, like we were just showing you in gold. So what's it going to do with that? Is it going to resolve to the downside down the road? Well, that's what most people think, that interest rates will go higher and later. But in the meantime, if you didn't recognize that, bit of pain. But of course, you did step out of the trends. FXE. I didn't see the market going from 109 all the way up to nearly 112. All right, I didn't see the futures making the comeback of 300 points the way that they have, but they did. Okay, but right here, do you disagree with me? No matter what, I don't see lower highs, lower lows. If you take out that high, you're not in a swing. And what happened there? What happened with that embedded reading? You lose it. First pattern is, if you don't get it back literally the next day, I'm looking for the 18-day average of closes. Now the whole game has changed. And from there, Johnny-come-latelys have been driving this market probably higher, as you're getting a lot of short covering out of that. The question is, does it have strength to really hold? Is this more than that? We'll find out. As I said, I've got a lot to teach you on Bollinger Bands. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software, so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.